Okay, good morning everyone. Welcome to my channel, Stock Market Technical Analysis and Trade Ideas. So basically what we do on this channel is we try to use the charts to give us an advantage over the markets. And I try to point out trade ideas that I'm seeing, before they happen so that we can profit off those trade ideas. So drop me a thumbs up if you guys find value as I go along. Again, if you're interested in learning this as a skill set and learning the technique, learning the strategy behind my videos, take my stock market technical analysis course, link in the description below. I put together about 4 hours of video trainings breaking out everything, and I priced it affordable for all, so it's well worth the money there. It's not too expensive. Check that out, link in the description below. Okay guys, today is Fed Day, so the Fed's going to come out here in about 2 hours. Likely, the highest probability is they're going to give us a a half a point interest rate hike. Anything on either end of that, if we don't get a half a point, then we need to understand what's going to happen. So we'll start off with the triple Qs here. You can see that basically they've got us right at this area of support. All right. So we've got 1 tag, 2 tags, 3 tags here on the daily chart, and we're at support. We also have bullish divergence that has been building for a while on the RSI and the PPO. So it's a bullish setup across the board. I'm seeing bullish setup across the board in pretty much all the charts, given that we are at support with bullish divergence right before the Fed. Okay, the market loves to do this kind of thing where it basically kind of narrows you down into a breaking point and then leaves everyone guessing which way it's going to break, but it's right at that point where it's likely going to break one way or the other, but then we don't know which way. Now the chart tells me, when I look at the chart, it tells me it's going to break up. My intuition that I'm getting from this is telling me it's going to break down. The reason why, now it's going against the chart. Okay, I do want to point that out. The chart is bullish. The chart tells me we're going to break higher. However, couple things. We've had a double test of this support zone. We are right at support right before the Fed with bullish divergence. It's just too obvious to me to see this divergence set up right here at support. Really, it's just a complete obvious setup saying, okay, go long. Here's a great place to go long. It's a complete bullish setup. And it's giving us this information right before a key Fed meeting. That's, to me, kind of suspect, okay? I'd like to see this kind of setup. Maybe we flush down and then you get this setup, or maybe we get the setup after the Fed, but to have it right before the Fed, basically just begging you to go long because of the bullish divergence, momentum's moving higher, right at key support. It's just a very, very objective area to go long, okay? And to see that very objective kind of offered up right before the Fed tells me there's something off here, tells me that I think it's a trap. Okay, so that's my intuition telling me that it is likely a trap and we're going to sell down to our profit target. Probably get there today, I guess. Well, maybe not today. It is quite a while. Maybe maybe this week. It's only about 5% or so. So we could get there today, I suppose. But all right, so one way to play it, I just want to point it out, is you could go, you could take a position long or short, because again, the setup, the chart's bullish, so you could go long, set a stop somewhere below. That's one way to play it. However, with this setup, if there is going to be a trap here, then they're likely not going to give you a great exit. So if you're long, they're probably going to gap you down or do something to kind of trap you. So maybe you have to take on a little bit larger losses than you would have wanted with a stop loss. So keep that in mind. If you're short, obviously you're going against the chart. You have bullish divergence. You're at major support. You're basically shorting at major support. And that's going against the rules of trading, basically, is you don't want to short at support. So that's also, a little bit of a gamble. Another way to do it is, take a position and taper down your position size. I think I'm leaning that way, where I might kind of taper down my size a little bit. Yes, I will be giving up some gains if I get the trade right. But at the same time, it's a little unknown to me. So having a really large position one way or the other just takes on undue risk. So this is trading is about reading the charts, analyzing what the technicals tell us, but then it's also about managing risk. I teach these concepts in my course. Okay, so managing risk, and this is one way to do it, is taper down our size. So that's probably what I'm going to do going into the Fed, and then I'll look to take those positions back or completely reverse depending on what I see and how things start to trade out. If we rally, I can see a rally up to about this 336 area being a level of resistance right up in there. So that is a possible. About 336 looks like should be some resistance. Okay, so talking about the Fed, and we'll move on to the small caps. Now the Fed is going to likely do a half-point rate hike. That's what they've signaled to the market. That's what the market's expecting. If they surprise to the upside, and let's say they hike 75 basis points, okay, let's say they actually do a hike that's more than expected, then the market should sell down pretty impulsively, and it is probably going to tell us, bigger picture, that we've entered or will be continuing to enter a bear market. Okay, that's I don't anticipate them doing that, but again, we have to see what they do. If they don't hike 50 basis points, they hike a quarter point. They will do a hike. It's pretty much guaranteed. But if they do a quarter point hike, that will show that there's basically the recent economic data that came out where we had negative GDP print is spooking the Fed a little bit, and they're going to start to ease off a little bit on their hikes and try to wait and see if the economy is going to continue to cool or whatnot. So if they do that, the market should actually rally because it tells you that the Fed is easing off. They're kind of playing chicken, and the market's starting to call their bluff, saying, okay, we see you're not actually going to raise rates because you can't, all right? So in that scenario, look for the markets to rally. Look for gold to rally pretty substantially, and I think that'll probably be the better play, will be gold miners, things like that. They should rally pretty strongly. Look for the dollar to fall. So looking at the dollar here real quick, then we'll go back to the small caps. The dollar has pretty much, if you go to the weekly chart, rallied into like a triple top area right here. All right, so we're at the weekly. We're at big resistance. This is going back quite a ways. And, the other thing is we had this upward trend line right here on the weekly. We were back testing, but we have overshot it over the last week. So really strong moves in the dollar. I think we're likely due for a pullback. If I go to the daily chart here, no real negative divergence though. So I just don't see the weakness in the dollar yet. All right, so just want to point that out on the daily. If you look at the hourly, there is slight negative divergence that started to build back here. So there it is, moving downward in the RSI and kind of flat in the PPO while the price was moving higher. So there's a divergent high. We've been drifting sideways. Everything's waiting for the Fed at this point. Okay, back to the small caps. So the small caps trading below the key level of support / resistance, which is about 188. We're below it right now, but it's right before the Fed, so we can't take where we're at right now as truth. We really need to see what happens after the Fed. So if the Fed comes out and they're dovish for whatever reason, the IWM could pop. All right. I think they're going to come out and they're going to scare the market down some more. All right. So that's right now I am thinking that we sell off on the Fed down to our target, about 173.80 down to 170. That's what I'm positioned for. Although, not super heavy. I'll look to add if I see some sort of a breakdown and we start to head lower. I'll probably add into that short. But as of right now, I'm remaining short, but not fully loaded. Okay, so again, talked about that risk mitigation and a way to kind of manage our risk in case we're wrong is to taper down our position sizes a little bit. Gold. Okay, so gold is basically trading near the support zone, the 200-day. If we get a little flush down in gold, down to about 1840, hit the 200-day, that's the buy zone. So maybe we see that right after the Fed comes out. We kind of do a quick little flush down there, hit that major support, and that should be the area where gold should hold. It's objective. It's a very objective buy zone. Again, just pointing that out. If you go to the weekly chart on gold, this is gold bullion. This is the bull market going back to 2018. All these tags of support on the weekly. There's another, and there's a bunch in here. And you can see we're basically right there. So if they sell this thing down, hit the support zone, hit that trend line and the 200, that's dual support. And that should be an area where gold should be able to build a base and continue to rally. So that is what I'm thinking is going to happen. If you look at the hourly chart, we've been basically building some bullish divergence here. So you can see right here, we've been moving up in the RSI and the PPO right there. And while price kind of drifted lower throughout the week and a little bit last week. So that is bullish divergence. So we have a complete setup. So if we dip down and hit that, we'll probably put in a new divergent low. All right, it will keep the bullish divergence. New divergent low, double support. It's just the most objective area you can go long on. Doesn't mean it's going to be right, but it's a very objective. It's low risk. All right, so I'll be looking to add to gold positions down there, and we'll just kind of see what happens after the Fed. Okay, this one, DVN, very objective area to add to a short or take a short today. I did add to some of my short today. So here's the thing about DVN. You can see here that basically we've got on the daily chart clean uptrend on DVN here. All right, we've been building that uptrend. Big negative divergence that has been building on both momentum indicators for a while. So each one of these new highs was a divergent high. We recently got a sell signal right here. You can see on the daily chart, we got the sell signal April 21st, followed by more selling. So nice confirmation of a sell signal. And the last few days, just a really impulsive rally, basically based on earnings, right back up into resistance. So this is a back test. Look at what happened today. They popped it above that support line right here. They popped it above, gapped it up, and nothing but selling has come in, smashing it back below resistance. This is very objective in terms of this being an objective area to short. So this is key resistance. I think we reject here and head lower down to our next target, which is about 50.43. The bear flag that was in play on this one, I can't really say it's actually in play. I have to kind of get rid of it at this point, just because we popped well above it. So we're going to go ahead and get rid of it, but I think we just get rejected off this trend line, head lower down to that area, 50, 48, whatever. And that's our next level of support. So I'm looking for that, and I like it. Okay, finally, I'm going to wrap up with Apple. So Apple is really the last holdout in an area of strength when it comes to the FANG stocks, and I think it's holding up the tech sector. If we see Apple break, we should see the tech sector continue to break and, break pretty impulsively. So what I'm watching on Apple, because I need to see this one break before the market will actually break and before tech especially, is the daily chart. Starting back in September 18th of 2020, you can see I've got it circled, all the tags of support of this trend line. Okay, recently we had another one, and then here's another one right here that we had just a couple days ago. All right, I need to see that trend line go. Right now, we are slightly above the 200-day moving average, right before the Fed. Earnings is out of the way. So if this thing's going to break, it's free to do it now. So maybe what happens on the Fed is we run down, hit the trend line. They'll probably try to bounce it a little bit right there. And ultimately, by the end of the day or by the end of the week, I suppose, we break, all right? Maybe it comes in the form of a gap down. I'm just throwing it out there of what might happen. But again, I need to see this trend line break impulsively, a nice red candle breakdown sell signal to signal further continued weakness in tech. So just to wrap it up, we have a bullish chart in tech and the market in general. We've got bullish divergence at major support, very objective area to go long. And to go against that is higher risk. So it makes sense to taper down position sizing a little bit. And then finally, we need to watch Apple to see this break, all right? If you see this break of this trend line, Apple just will have broken, it's over a year-long support. And this is the support that has been holding Apple up. Once this breaks, it should be a relatively quick move down to about $100. If I look at the weekly chart, $100 this is your bull market in Apple going back to 2010. So you can see this was resistance before the Fed went crazy in during COVID, but you can see support at the bottom and then resistance here at the top. All right, so if we break this channel, we should come down to the top of the channel. All right, probably break it eventually and head to the bottom of the channel, but for now, we'll just watch the top. I think that's a very high probability target if we break this pattern right here and pretty much this trend line right there. All right, so watch that. If you go to the daily right now, that's sitting today, that support line is about 155-ish. You start to see 155 give way, and not just a little brief below. You really need to see it start to impulsively sell at that 155 area. Then that's going to be your sell signal in Apple. And that's likely going to be your sell signal and continued downside in the tech sector. So that is what I have for this morning. Fed comes out here in a couple hours. I talked about kind of how things should play out. So again, if the Fed does a 75-point basis hike, you're probably going to see gold sell off. You're probably going to see the market sell off. If they do a 25 basis point hike, you'll see gold rally pretty strongly and the market should rally as well. 50 basis point hike, it's really based on expectations and how they come out and talk about future hikes. So if they start to ease off on their hawkish talk, then it will be kind of the scenario I talked about where the Fed wants to walk the market down. I think it's potential that they've got one more thrust downward they want to get out of the market and then start to back off on the interest rate hikes. All right, so that's my baseline scenario. Good luck, everyone. Catch you on the next one.